Let's move on and take the discussion forward with Kadambelil Thomas, MD and CEO at ESAF Small Finance Bank, who is joining us now. Thomas, afternoon. Thank you so much for your time. You're raising some funds via NCDs, etc. But I want to understand what kind of growth are you seeing right now? This is raw material for you, yes, but what's the outlook on the near-term growth?
For the last 7 years, we have been growing at 30 to 32, 35%. And the current year also, we are growing at 25%. So far, we are growing. So we are expecting that growth momentum to continue. So that is the reason for raising these tattoo bonds.
How's your MFI exposure right now? And how is it panning out? Are you taking it consciously? What kind of contribution will it have going forward in the next few years? Is it going down?
Yeah, when we started, it was, as you know, we were an MFI turned small finance bank. It was started as a 99% as MFI book. And we have, over the last 7 years, we brought down to 71%. So we will, as per it is growing every year, we have been reducing at a 4 to 5% reduction is happening. So that will continue. But while growing the other books, we are maintaining the absolute numbers, but the overall percentage is coming down because our other assets are growing.
You talked about how you expect the advances growth momentum to continue. So you're saying that 25% plus kind of growth will continue. And also, what about deposits? Because there seems to be a war of deposits right now. What's the expectation as to how you'll grow that side of the business?
Yeah, fortunately, our deposit growth was also happening at almost the same pace. So we didn't have we have not faced any much issues on the liability side. So we hope that that trend will continue, and we have opened around 31 branches during the current year. So all those branches also will start mobilizing deposits and gaining business. So the overall growth momentum will continue. That's what we have been seeing that in the past, and we are expecting to continue that.
Mr. Thomas, I also had a question regarding the asset quality. Of course, Q3 was a bit of a blip on account of specific regional issues. But what do you think will be the exit rate for you for FY24, or let's say first quarter of FY25? What could the NPA levels normalize to?
Yeah, the slippages we will be able to. What you said is correct. On the third quarter, we had a gross NPA of 4.16 and a net NPA of 2.19. So we hope in the next 2-3 quarters it will get stabilized and will be back to the normal.
See, you have obviously from a small have become a small finance bank from a MFI. How is your overall sourcing of funds on a blended basis? What's your costing, and where do you aim to take it in the next few years?
Can you repeat
the cost of for you right now? How is the cost of funds on a blended basis shaping, and where would you like to see your cost of funds go to?
Yeah, our 91% of our deposits are retail deposits, and as of now, our cost of fund is 7.2%. And once the overall interest rate reduction happens, then our cost of fund also we expect to come down to maybe I cannot commit a specific number, but overall, once the interest rate reduction starts from the central bank, then our cost also will come down.
It's difficult to kind of crystal ball gaze there, but still, would you agree that your NIMs will at least stay in the double-digit mark? And what about the ROAs? They're well above 2% already. What's the internal target that you're working with? 2.5%, 3% on ROAs?
So we are expecting to maintain a 2% ROA because as we grow our other assets, so it will have an impact on our NIM. So the ROA to 2.2 that percentage we are hopeful of maintaining, and the NIM also just closer to 9 to 10% that level we'll be able to maintain because as the micro banking portfolio comes down, the percentage comes down, and we are also now building our books on MSME, mortgage, and gold loan, those sectors.
Okay, Mr. Thomas, on that note, we let you go. Appreciate you making time and speaking with us.